All right, cool. So today we're talking about trading with a small account, and this is going to help you compound your way to a larger account. So what we're covering today is trading within your budget, the power of compounding, position sizing, and no FOMO, which is basically fear of missing out. As always, we have to give a disclaimer. We are not financial advisors, and this is in no way financial or trading advice. We are simply sharing options trading strategies that we use and have been successful within the stock market. This presentation is for entertainment and educational purposes only. There are significant financial risks involved with trading, and we are not responsible for your losses in the market. Should you decide to utilize the information and/or strategies discussed within this presentation. So by choosing to proceed, you are acknowledging your understanding of this disclaimer. So first and foremost, it is very important to trade within your budget. You want to enter trades based solely on what you can afford. And keep in mind, the cheaper the stock, the cheaper the contract. So I get a lot of people, or Ray and I, we get a lot of people who ask, about how to find trades that are within your budget. You guys, you can utilize Finviz to search criteria, search for stocks that are inexpensive, and the cheaper the stock, the cheaper the contract is going to be. So I put this in the community several times. Some of you may be familiar with this diagram, but you want to compound your way to the top. And we do this by understanding percentages and not dollar amounts. So a lot of times you guys may see Gullah in the community, he always does the percentage sign over the dollar sign. And when you do that, it can help you to understand the importance of compounding. You don't want to look at dollar amounts, you want to look at percentages. And you also want to understand the power of utilizing a compounding strategy. So if you can take $100 and get $10 from that, and you can continue to compound your way to the top, eventually you may be at $1 million account. Now, we like to tell people in the community, starting out, a 20 to 30% risk tolerance, as well as a 20 to 30% profit target goal is ideal. A lot of people don't want to just settle for a 10% return. But when you think about it, if you had a savings account, your savings account is not even going to give you 10% at the end of the year. All right, so position sizing with expensive trades. So here's an example. If you have a $500 account size and you enter a contract with a $100 premium, you're essentially risking quite a bit of your account. So I like to advise new traders, again, 20 to 30% profit is great starting out. Risking no more than 20 to 30% on each trade is ideal. So for example, if you purchase only one contract, you gain 30% profit, you've now made $30. And if you have an account that's $500, you have essentially turned your account into $530. But if you lose 30%, you're now at $470. So I just put this here so you guys can see the differences when you start to add more contracts, what you're gaining and what you're risking. So for example, if you were to buy 2 contracts on that $500 account, you're risking 40% of your account now. If you were profitable, you've made $60 and you've now made a $560 account. But if you lose money, you're now at $440. So this is basically just a breakdown. And I'm going to leave this here for you guys just for a second so that you can see it. But keep in mind, you can refer back to this. We're going to post this in Wealth Squad University. So that's for anyone who wants to screenshot it. Now, position sizing with inexpensive trades. So if you're going to take the same $500 and you look for a contract that is more feasible or more within your budget, let's say a $25 contract, and you guys, there are contracts that are $25 or less. I actually made about $2,000 off of a contract that cost me $10. Obviously, I purchased multiples of those contracts, but still you can do it. And that was on a Lotto Friday. So by finding cheaper trades, you're able to take larger position sizes. You're able to purchase multiple contracts without exposing your account to so much risk. So for example, with the same $100, which is 20% account risk, you can buy 4 contracts. Now, this gives you a lot more instances where you can be wrong, but at least you still have more skin in the game as you would, as opposed to if you were to buy a contract that's $100 or more. All right, so this is something that I decided to do for you guys today. For everyone with a small account size, this is why I urge you guys to show up for class today. I have literally put together a bonus watch list for anyone with a small account. So these are inexpensive tickers that trade with decent amounts of volume every single day, and they range from $20 to $80. So let's just see, I'm gonna take the first 3. So let me remember that: American Airlines, Carnival Cruise Lines, and PLTR, so Plantier. So let's just check it out. Let's just test the theory. So if I were to get a weekly contract with American Airlines, I can easily see that it has a lot of volume. So that's good. It's very fluid. You can get in and out of this contract. The bid and the ask is nice. It's a decent, very decent bid and ask. It's just a $2 spread. $47 for the bid, $49 for the ask. And that is if you're playing near the money. If you were to go a little bit further out the money, you guys, $28, $15, $9. Now, obviously, you want to make sure that those strike prices are attainable by the expiration, which is a weekly contract, but still, I just want you to see that there are cheaper trades out there. Now let's look at Carnival Cruise Lines. All right, so Carnival, here we have $33 bid, $35 ask, $10 bid, $11 ask. So you guys, again, you have to know what to look for, but that's why I decided to put together a watch list for any of you who are starting out. I did a lot of the work for you. All you have to do is just know how to trade them. And then what was the other one? Oh, PLTR. Let's see. Whoa, PLTR has some very good volume and open interest, and it's very inexpensive. I might need to be watching this one myself. So PLTR, $21 contract, $9 contract, $5 contract. You guys, you can spare $5. You can buy multiples of these contracts. You can definitely compound your way to a larger account just by looking at cheaper contracts. All right. Let me go back. So again, you guys, look at the list, take a screenshot, do what you have to do. Again, it's ranging between $20 and $80. So obviously, when you go to towards the $80 mark, let me just look at Snap and Twitter, and let's just see what those are. Okay, so obviously, when you're going to the higher end of that range, it's going to be a little bit more expensive. And this is for, yes, this is a weekly contract. So let's look at Twitter. So again, you all, the cheaper the stock, the cheaper the contract. So Twitter is fairly inexpensive. I mean, if you're playing with Twitter near the money, you're roughly spending about $115 if you take the ask, 75, 47. So again, you guys, this is something that'll really help you. Now, I wanted to discuss FOMO, and I typed this up here. A lot of times I got someone to DM me to ask me why I always read word for word, even though I have it typed up for you guys. You guys, we do have a lot of people that are within the community who may be deaf. So this is why I do that. So let's just give those people, you know, a little bit of grace. Now, a lot of times in trading options, you will see traders announce that they have made several $1,000s in one day off of a trade. And so new traders are automatically drawn to that trader because they think that they have this secret sauce. But what the new trader may fail to realize is that that other trader may have a large account size that they either compounded their way to, or maybe they just had a lot of money to begin with. Now, this is going to impact their risk tolerance, the amount they spend on trades, position sizing, et cetera. It's going to impact that. So traders with a lot of money, for example, can use $10,000 have a very low profit target of 10% and easily snatch $1,000 from the market. They may even say, hey, I'm going to snatch 5% and walk away with $500 in a day. And that's a very, very, very attainable thing in the market for something to just move 5%, for something to just give you a small movement. So I urge you guys to stop pocket watching and focus on your account and your account size. And keep in mind, your risk tolerance is like a muscle that you have to build. You start off small, that's fine. You have to figure out what works for you, and you work your way up to a larger risk tolerance. For me, $1,000 may not be that much for me to lose in a day, but for someone else, that may be the difference of their lights being on or off. So you have to keep that in mind. Do not chase people who are always in the community saying, I just made $10,000 today. I just made $7,000 today. Focus on your account, please, you all, because you do not know what they're trading with. You don't even know what their responsibilities are. They may not have a lot of bills. You know what I mean? They may still be at home. You don't know these things. So please, you guys, I'm urging you to focus on your account. All right, we're good. Y'all got me? Give me a 5 in the chat if that makes sense. All right. Y'all going ham with the 5s. All right, so Myron is in the community, and Myron is one of our beloved, members of the community. He's been rocking with us for a while, and a lot of you may know I just recently released a new course, part 2 to my Options Made Easy. Part 1 is the beginner-friendly course that has some mastery level content within it, and it is $35 for members of the Wealth Squad. All you have to do is use the discount code Wealth Squad. I also have a part 2 that I just released that covers entries and chart patterns, and that one is $35 for members of the Wealth Squad. All you have to do is use the code Wealth Squad. So Myron decided that he was going to gift 4 courses to members of the community, and I decided to do it for all of those who showed up for the call today. So 4 people will win the course. However, it's going to be the first 4 people that can answer these questions. What is a strike price? What is the difference between a call and a put? And what is the recommended profit loss target percentage recommended for new traders or traders with small account sizes? And you, the first 4 people, will get to decide whether or not they want to do the options beginner course or part 2. And just type it in the chat. You got to answer all 3. All right, so what I am going to do, y'all making this hard for me. You have to answer all 3 people. And if you already have the course, please don't make it hard for us. Oh, man. All right, so you guys are making this harder than I thought that it would be. And so I think we're probably going to have to switch gears here. So give me 1 second. I'm about to do something really cool for you guys. Just stand by, you all. I'm doing something for you. All right, I'm going to stop sharing my screen really quickly. We need some hold music or something. Ray, you can't see my screen, can you?
No, I can't.
All right. So y'all give me 3 minutes. I'm gonna try to get this done really fast. I'm gonna say this to you. You might want to go however you can to provide resources really quick so that you can already be, on your mark, get set, go, All right. So what I just did, you guys, instead of doing 4, we're going to do 8. We're going to do 4 of the first course, which is beginner friendly. So that's part 1. And then we're going to do 4 of part 2. You guys, for the first 4 people, for each one, use the code FREE. And there you go. I had to make that easier because it was just too much going on. I'm sorry, y'all. All right. So use the code FREE. First come, first serve. And you guys can thank Myron. Geez, my phone going off quick. Y'all fast. Myron, let them know who you are. It's going through quick. So already we got 5. It's 3 more, and I don't know of which one. No, don't tell me free, you guys. What are you doing? All right. Anyways, so let me get back to it because, I don't think y'all hear me. All right. So anyways, Ray, if you want to tell them your social media.
The class already done?
Yeah, we're done. That was what I had for everybody. I gave you guys a bomb watch list.
Well, I guess if you have any questions, then you can raise your hand.
Yeah, raise your hands if you have any questions. Let me just.
They asked you, could you display the watch list again?
Yep, I sure can. All right. 1 second. Let me go back to it. There we go. That's the watch list. Let me see if I can.
Are you sharing? You're not sharing your screen?
I'm not sharing. I'm sorry, y'all. My bad. All right. Can y'all see it now?
Yeah.
Okay. I'm going to see if I can name these off the top of my head. So American Airlines, Carnival Cruise Lines, Frontier, Save is an airline, ain't it? Who is it? Macy's, Norwegian Cruise Lines, Riot, Fubo, Blink, Neo, Pfizer, Bank of America, United Airlines, DraftKings, Wells Fargo, Sunrun, Mira. Is Mira Mira? I don't know. I think WBA is Walgreens, Upwork, Twitter, and Snap. 2 hands are raised.
Dominic, what's your question? Dominic? Okay. Or not. Nicole, what's your question? Okay. Let me just.
There are
7, you got a question? It's like.
I'm sorry. Can you hear me now?
Yeah, I can hear you now. Hold on, Tevin.
Okay, I was on mute. I'm sorry. Hello, first of all, hello to you too. And thank you for your classes. They're always very good. I have a question for Kay. Your part 2 that came out, could you just, I have part 1 and I've been in this for quite a time. Could you just kind of go over what's in part 2? Like, because I know it's for more experienced traders.
So part 2 is covering chart patterns and your entries for chart patterns. I also throw in a few little tips that a lot of people may or may not know about entries on chart patterns. I will say one thing that I also advise within the course, which is something that I want everyone to know, regardless of anything, is that whenever you're looking to short a stock, always be mindful that you can only go so far when you're shorting a stock. it can only fall to the floor. So you want to be very moderate with your profit target whenever you're shorting something, because it can bounce and it can reverse to the upside. So you don't have that infinite profit target or that infinite goal as you would if you were to go long on a stock. But anyways, the course is basically, again, covering chart patterns. And it's helpful to understand part one because it'll tie into part two. I run through FinViz a little bit for you to show you how to look for various chart patterns, also how to utilize Twitter for, finding trades as well and looking at particular tickers. So yeah, having part one is definitely going to be essential. Now, do you need part one if you already know about, do you need part one if you already know about trading options and you understand contracts and the Greeks and all of that? You don't have to buy my part one if you already understand all of that and you just want to go to part two. But if you don't understand all of that, then I would definitely still get part one. Part one is actually very beginner friendly, but it is also mastery level content in there as well.
Okay, yes, I'm quite familiar with all that. It's just the entry, like, that I have a little issue with.
Gotcha.
So,
I cover entries in that. Yeah, for sure. I cover entries in that.
Okay, thank you.
No problem. And you all, with my course, with the part one, I want you all to know that I invested personally, and I just bought another course in the middle of the night last night. I personally have invested probably now about 3,500, if not more, in courses. So all of that knowledge, I crammed a lot of that knowledge into my part one course and my part two course. Part one is very, very detailed. It has a lot of good information in it. Part two is just giving you more chart patterns and entries. All right, we got more questions.
Dominic, I just asked you to unmute yourself. Should let you. Are you able to unmute yourself? All right, we'll come back to you. Tevin, you can go ahead.
Thanks, Ray. Yeah, I just had a quick question, like regarding this watch list that Kay posted. If we wanted to like start trading with any of these tickers, would we like need to learn like the movement of the price for any of these tickers, and like is that done using the strat? That's something that I like just had trouble trying to begin doing.
Oh, absolutely. So you have your options. If you are someone that understands the strat, you can most certainly apply the strat to these particular tickers. If you're using indicators, you can actually do the same thing. So yes, these would be great, especially just if you want to just pick out 5 of these and just become very intimate with 5 of these stocks and study the price movements, study what they do when they get good news, study what they do when they get bad news, study how they move along with SPY, study the chart patterns, look at the average true range. If you do that, you can be extremely successful just trading the same 5 companies. But this is a list that'll at least give you something to look at, so you never have a day in the market where it's like nothing is moving. Something on this list is going to move. You know what I mean? And so you have your options of making money just by looking at these particular tickers that may fall within a budget for someone that has a smaller account size.
Hold on.
Did that answer?
Tevin?
Yeah, that answered my question. Thanks again, guys.
No problem.
All right. And then Dominic, I typed your response to your question. Did you see it?
Dominic has his hand raised again.
No, yeah, I told him to, but it's not letting him come off mute for whatever reason. He typed it in there, but I responded to him. Okay, so they're good. Anybody else have a question? Feel free to raise your hand.
While we're waiting to see if someone has a question, I got this question several times, and I'm sure Ray probably has seen this question too, about people who are asking, like, can they be profitable if they only buy one contract? So in the sense of, the word, yes. I mean, if it works out in your favor and you make money, that's essentially profit, right? But we a lot of times buy multiples, you know what I mean? Because if I can get 20% on one contract, that 20%, the more contracts I buy, I'm just multiplying that by however many contracts I have, which helps me to make more money quicker, right? So when you have a smaller account, if you're looking for inexpensive trades that you can buy multiples of, then that'll help you to get to a larger account faster. And it's a good way for you not to expose, your entire $500 to so much risk. If you have $500 and you decide to buy 4 contracts and only use $100, you're essentially using 20% of your account size. So that's 4 contracts. So if it ran up 100%, you're just multiplying that by 4 contracts. So hopefully that makes sense to you all. And the biggest reason why I wanted to do this is because I'm seeing a lot of people in the call out channel or taking call outs for trades they can't afford. You have to treat trading like you would treat shopping for groceries, like you would treat shopping for clothes or going out to eat. If you have only $500, $1,000, why are you taking trades that cost $150, $200? That is hustling backwards. So please don't do that, you guys. If no matter what looks good in the community, if you're seeing everybody just going crazy, oh my God, this ran up like crazy, but it's out of your budget, it's just out of your budget. Because guess what? If it doesn't do what it's supposed to do, now you're AO, now you've lost a lot of money. Does that make sense? I like when y'all put 5 in the chat. All right, Nicolette, I like that name. What show is that off of, Nicolette? That was on like a, dang, I'm showing my age. That was on like a UPN show.
You can go ahead and ask your question, Nicolette.
Okay, there we go. I think it was on a show, but my mom, she got it from like a, yeah, I don't know. I don't know. But I actually started out with like 350 or something like that. And I was doing paper money first. And then I was like, okay, I'm profitable. Okay, maybe I can start with my own money. And then this past week, I just lost like $100. And so what I'm wondering is like, what do you guys, I know like 10, 15%, but like, what do you guys recommend if I see like if AAL has like because it's really hard. Like when you start trading and then you see that it's really popular, then they start raising the prices and then you can't really jump in on that trade. So in that instance, do you recommend just not trading for that day and then just, I guess, studying? I'm not too sure.
Yep. If it falls out of your budget, if it runs up, you have to be okay with missing that trade. Because again, if it's out of your budget and you chase it and it costs more than you can afford to lose, because with everything you enter, I want you to keep this mentality. It can all go to zero.
Right.
Would you be okay? And even if that's not like, so going to zero is like the worst case scenario, you're not paying attention and it just flatlines, right? But I want you to always think that. I want you to always think no matter what, but we want you to obviously manage your risk. It could go to zero. So if you were to spend $100 and it goes to zero, are you okay with losing that $100? You don't want to chase anything because you could essentially lose it all. So you have to be very, very, very disciplined with what you spend. That is going to make the difference between whether or not you're profitable in the market. And a lot of people are chasing trades. A lot of people are running after something that has ran up. A lot of people don't even understand averages. So It's very important to know what you can afford and do not break that promise to yourself of I'm not going to spend more than this amount on this trade.
Okay. Okay. Thank you so much.
No problem.
Anybody else has any questions? And we do recommend paper trading. That definitely can help.
Like think of it like this, you guys. I have an auntie who is a professional speaker, right? And she loves to break things down to me whenever she talks to me in like very realistic, ways that I can just understand it. So would you go to the movie theaters and spend $20 on a small box of popcorn? So you have to think like that when it comes to trading. Like that's that box of popcorn. If you're trading American Airlines and on a good day, you can get into that trade for $10, $15, $20. This is why it's important to study the stock and study like what the ranges normally are. Why would you chase something at the top? You know what I mean? Like that's a $20 box of popcorn. That just doesn't make sense. You know what I mean? Especially when you saw that it was just, $5. So, and I'm saying that to say, if we call out something in the community and we say we got into XYZ and we paid an average of $5, why would you jump in when it's 20? All right.
Oh, Calvin got a question.
I know I'm talking a lot, y'all. I'm finally able to use my lungs properly. I was so winded for like the past 2 weeks where I couldn't really speak. So I'm just gonna use my voice now.
Go ahead, Calvin.
Hey, I just want to say thank you guys for doing the class today. So my question is, I hear you say, like,
You kind of breaking up, Calvin.
get out.
You giving me Transformer vibe. I can't hear you, Calvin.
Okay, 1 second. Let me close out some apps.
Okay.
Is that better?
Yeah, that's better.
A lot better. Okay. So you guys say, if the trade, I like doing calls and puts. So if the trade goes against me, and you guys say, cut your losses and re-enter it, or you guys sometimes say double down or add down. Cool. Does that affect the wash rule? Like if I just cut my losses, but I want to get back into it as a lower price, like should I be concerned about that, or do I need to come back to it in a later date, like another month?
When it comes to averaging down, averaging down for me is not really a strategy that I go by all the time. And the reason why, it can be effective if you know that, by the expiration date, the stock is going to do, or the trade is going to take off in the way that you need it to take off. But on the downside to that, averaging down is still spending money. So let's just say it doesn't do what it's supposed to do. Now you've spent even more money, you've lost even more money. So if I don't have that extreme conviction, like the charts are looking just immaculate, the catalysts are just looking immaculate. If I don't have that, I'm not averaging down. Also, you don't have to average down. You can always just exit the trade and re-enter when it's more favorable.
Oh, okay, yeah, I think that was the most important part I was trying to figure out is when you guys say like cut your losses, exit the trade, and then re-enter it. Like, yes. Does that affect like the wash? I heard something like the wash rule. I'm not really understanding if it applies.
You're gonna have to speak more so with a tax person on the wash rule, because that's technically tax advice.
Oh, okay. Okay.
Yeah, we don't really fully know it inside and out. That's because the wash rule applies to taxes with options. So you have to get more so with a tax person.
Yeah,
with that.
We have a tax chat. So if you're asking a tax chat, we just are bound to answering those questions.
Oh, okay, thank you. Well, you guys did awesome as well. And I
Thank
appreciate it.
you.
Thank you so much for answering my question.
What do you do when you've charted the day before and the prices ran up a few dollars from your entry? You miss that trade. And unless it's going to continue and you're going to trade off a continuation, which is like trading the momentum, you might just want to look at another trade. It happens all the time. I'm sure that, me and Ray can tell you countless stories of things that we've charted, the night before the market opens, and then we wake up in the morning and it's gap several dollars past, what we charted, and all of that due diligence just goes out the window. I mean, it's a part of the game. Okay, Ray answered that. You're welcome.
You can chart in the morning if you want to. I typically do mine the night before, but you
Yeah.
definitely can chart in the morning.
Yeah, Nicolette, I just put that into the community the other day too. I stated that I'm noticing that I'm a lot more successful by finding things that have setups that I like at night, just so that I'm not doing all that work in the morning. So I'm just, doing a two-step process. I'm scouting at night and then I'm charting in the morning. That way, if things start to move or gap in the morning, I'm eliminating, having to just throw away so much hard work. Pattern day trading advice. You need to go to Webull, Thinkorswim, cash account under 25K. You can avoid pattern day trading. For a stock to gap, there is, let me show you that really quickly. I'm glad you asked that question.
SQ has a gap.
Yeah, I actually made a gappers list. Let me move this over here. So you guys, you see what I did? I put together you all's little list over here for the trades that are under $100. I'm gonna be watching those with y'all. And then I created a gap list. So, oh, y'all gonna get a nice little bonus here on this call. Let me give y'all. All right, so I created a gap list. What it means when we talk about gaps, there's obviously a huge gap in price where price just completely jumped up. Like there was no slow climb. There's just an obvious gap in the prices. And so typically what happens is whenever you see something gap, and let me see if I can give you an example on this chart. I'm sure Zoom has a bunch of gaps. All right. There is a gap, but it doesn't have a bunch. Oh, my thing is about to die. So yeah, we got to wrap this up really soon. So anyways, what it basically means, as you can see here with NVIDIA, there is a gap. So typically what happens is price actually normally returns to fill in that gap. So whenever you hear us talking about gaps, here's another one over here, it gapped down and then price came back to fill that gap. So basically it just means that price action may return at some point to fill that gap. All right.
Rashawn, what's your question?
Can you hear me?
Yeah, I can hear you.
Yeah.
Okay. So I have a question with like from getting into contracts at the market open. So I put the I guess the bid ask like $2 above what it was, and the order still didn't fill. So I'm asking like, how far do I have to go up in price to make sure my contract gets filled at the opening?
There will never be a set number that we could give you that would be accurate, unfortunately, because price movement is going to differ for every single stock. So we can't say for this contract, you might want to do $2 above the bid because it might gap $5 above the bid. You know what I'm saying? So there is never going to be an amount that we could give you.
So there's no point to put it in for the night before then, right?
No, honestly, we would prefer for you not to do that because you could essentially overpay. You know what I mean? Like price may, what if you do $2 over the bid? Your order is going to feel if it falls. You do realize that because they're going to say, oh, you're willing to pay me this much on something that's falling? I'm taking that. So,
Right.
so I would prefer for my trading style to wait and see what happens at open. Because if you're doing $2 more and it's tanking, I'm taking that money. You know, if you're gonna pay me more, then yeah, I'm gonna take that. So just try to, wait and see what happens in the morning. And again, you guys, the key to trading is being okay if you miss the trade. There are going to be so many opportunities every single day. You have to be okay with missing a trade.
And then I have one more question. Is that fine?
Sure.
All right. So I tried to put in the script for the shred on Thinkorswim, and I can't get the numbers on there. Is there like an updated version?
Did you
Right.
go to user defined studies and add it?
Are you
Or
asking me? Yeah,
yeah,
yeah. I copied and pasted the link to the setup, and then
you copy and paste it into shared items, right? I think it's set up shared
yeah,
items. It's not going to pop up automatically on your chart. You have to go to studies and add it to your chart.
go to studies.
Yes, studies,
Okay.
user defined studies, and then add it to your chart.
All right. All right. Cool. Thank you.
No problem. If you want to use other indicators, you can use other indicators with the strat if you want to. And if the market shows that the stock is tanking, you just wait until the market opens and sees what happens. If it just keep tanking when the market is open, then you could potentially buy puts. But it's like you just have to see what happens when the market opens because you can't buy anything pre-market. So that doesn't really mean anything. But other than that, do y'all have any more questions? If not, we'll go ahead and bring it to a halt. Well, Ryan, what you got?
So guys, I'm a complete newbie. Can you hear me?
Yeah, we
Yeah.
can hear you.
Yeah,
Okay, great. So I recently joined the Wealth Squad this week, this past week.
Well,
And I'm really trying to like read as much as I can as I'm in the platform. I just like some advice on where would I need to start if I'm trying to learn options and to understand the strat, like where would be the first place that you'd point me to?
market facts and resources. And then you have Ray, who is our strat Uchiha, who knows almost everything there is to know. He's a great resource for it too.
Okay, great. Thanks a lot, guys.
No problem. Oh,
You're
that was
welcome.
cool. Pins has such an ugly gap and it's just trading sideways. I ain't touching that.
All right. Okay, you have anything else?
I know you guys, are y'all good?